right, just a day to go for the budget, and then the vote on account will have FM speech elaborating on hopefully every aspect of concern, be it markets, corporate sectors, investors, or taxpayers. Now, 2019 as an interim budget was full of surprises. Should we be expecting something on the same lines? What's the analysis or expectation from market experts and participants? Let's get on board. Today I have with me Mihir Vora. Mihir, hi, and welcome to the Money Show. And I believe you have a very strong lineup for the budget day as well, going across channels and decoding the budget. But then, since we're talking about pre-budget today, my very first question that I want to ask you is what kind of a budget would you present, though it being a vote on account and 2019 was a complete surprise budget? If we have to continue the same kind of momentum, and if you are the finance minister, what is the kind of budget that you would be presenting?
Hi, Kavita. Thanks for having me on the show. Uh, the good thing about budgets these days is that most likely they will be non-events because a lot of the taxation policies and slabs, etc., have been simplified to such a great extent. Then there is no need for major tweaking around, frankly speaking. For example, the GST rates anyway are decided by the GST Council. The corporate tax rate slabs have also been rationalized, and now we have 25% corporate tax. So it's a pretty competitive, globally competitive tax rate. And even on the individual side, the new taxation regime, which the government really wants people to shift to, is also quite simple compared to the otherwise. So not much tweaking left. So what remains to be seen is what the government's assumptions are in terms of the spending patterns. So for the last 3 years, we've seen that government has really been conservative, and rightly so, in revenue expenditure. So subsidies, etc., have been quite controlled. And even last year, for example, FY24, the growth in revenue expenditure was barely about 3%, whereas the growth in capital expenditure was almost 30% for the last 3 years. So a big thrust was seen in capex, and we would like to see that that thrust continues, whether it's on defense or roads or highways or infrastructure, railways, etc. The markets would like to see capex continue. However, it is an election year, and we have seen some rural stress building up. So there may not be as much of a case for curtailing the revenue expenditure so much. So probably we might see some revenue expenditure growth at the cost of capital expenditure. If that's the situation, then that might be a bit of a debate for the market. But otherwise, I don't see any major big bang issues.
All right. So as far as our exclusive sources are concerned, here and defense might see 5 to 8% of capex expenditure. A lot of announcements on railways per se. Again, all on expectation lines. But then, see, sector-specific announcements and having the deficit under control. All these announcements would be something that market would really be interested in. But then I also want to look at the bigger picture, because this is going to be a budget where the government would decode and elaborate on all the past work that they've done, but they will also be setting a tone for the future. And this could also mean, I mean, in a way, you can also anticipate what would be coming in the budget post-election. For that, what would be your triggers, and what would be those between the line statements that you might be, wanting to know?
I think the key thrust should continue to be investments. Though, as I mentioned, there may be some announcements because it's an election year on schemes which are more directed towards the rural as well as urban weaker classes. For example, the PM Kisan Yojana, the Pradhan Mantri Awas Yojana. Those are the schemes which have been successful in the past. And we could see some increased allocation to those schemes. Manrega is anyway there more or less on tap, so that's not a big issue. But I would like to see, if there is a if there is a revenue expenditure growth because of, the rural thrust or thrust towards the poor, urban as well as rural poor, whether it will be matched by equal revenue considerations. For example, this year divestment targets were there, but they have been quite low so far, and the markets are very good. So it'll be nice to see some more increased divestment targets for the next year, which can be used to fund all these schemes. So that balance will be interesting to see.
takes on the housing sector or something that you would be interested for being announced? We know how affordable housing, that's gaining momentum. Any thrust on that could be given on the budget? How do you think the street would react, and what would be your expectation? Apart from that, a lot on urban and rural scheme of housing is likely to be announced. Even that's one of the news that's going around as far as budget expectation for housing is concerned. Would you be interested in any announcement related to this sector?
Yes, that's what I mentioned. The
Yeah.
housing, especially for the affordable housing for the poor, can have a good trickle down impact both on construction as well as on, say loans for the smaller banks and NBFCs. So that can be an interesting segment. We would certainly like to see capital expenditure continue. We in the last 4 5 years, the capex budget of the government has almost been trebled. They used to spend about 3 lakhs in capex, and last year, I mean, FY24, it's going to end at close to 10 11 lakh crores. So that momentum has really kept up a lot of the stocks in the market, especially in the construction, cap goods, and infrastructure side. We don't want to see that momentum, weaken. So continue capex, generate more revenue, and aim for more expenditure. That would be the ideal situation to be in.
Mihir, any specific boost to PLI or related to a specific sector? And I mean, taxpayers definitely expect a lot, but then that will be my next question. But then what about having higher PLI scheme for specific sectors?
Certainly. So I think PLI scheme is definitely a focus area. And in fact, I was going to mention that because apart from government capex, we also need private sector to pick up. And I think we've just begun to see the success of PLI schemes in many sectors now. And the government has been very open about it, very consultative. In fact, any segment which really goes out and represents the government, that if such and such incentives are given to us, we'll be able to substitute imports or make more in India. I think the government is more than willing to take a look at newer sectors. So we've seen PLI being rolled out already for, it started with mobile phones, then into other electronics. Now we are talking about white goods, pharmaceuticals, auto ancillaries, chemicals, any segment which really is taking imports and wants support. I think the government is open to it. And I don't even think there's a PLI budget, frankly. I think it's open-ended, and the government will be more than willing to fund any amount of, encourage any amount of private sector investment in any sector. So I think that's again one important thing we need to understand, that the PLI number may be announced, but I don't think it's a closed-ended scheme. It's an open-ended scheme.
The next question of mine could need an elaborate answer from you, because Mihir, what we saw in the last state elections, when we are in an election mode, we see a lot of freebies and we see a lot of tax ops, etc., which interest people, the voters especially. But we saw in the last election that this government has gone beyond that. The market definitely knows that we have a stable government that is in continuity, but there still would be question on the points that you highlighted earlier in your answers. These kind of announcement would really make the market very happy. So continuity is not the question, but do you think the question I'm talking this question is actual election perspective, but will the question for the market will be how many seats the government get, and also when we're talking about continuity of the reforms to attract more foreign money, to attract more foreign investors. Do you think this can take a center stage, or should be a point in concern for the government also in the budget announcements?
No, I think while there is pressure, there is always going to be pressure in an election year. And frankly, in India, there is some state or central government election happening all the time. So that I don't think is such a big worry. So and if you look at the current sentiment, given all the recent developments, etc., the current regime seems to be in a stable position. We also need to keep in mind that at the back of the finance minister mind is also the fact that India is going to be included in the global bond indices from this year onwards, and we are expecting good inflows into our government bonds and corporate bonds because of that. Getting included in the global bond index does come with its own set of expectations from global investors, which is that you need to have a responsible fiscal policy, you need to show a path to budget deficit reduction. So that would definitely be on the FM's mind. So I would definitely expect the FM to show us a glide path from the current deficit of 5.8, 5.9%, my guess is that FY25 should see somewhere between 5.3 to 5.5, so about a 50 basis points reduction in the fiscal deficit for this year, and then a path to 4.5% deficit. So I think in terms of numbers, I don't think it'll be a profligate number, but the composition of spending, revenue versus capex, populist versus, will be interesting to watch. I do hope that they assume higher collections, especially from divestment, etc., and spend that on capex rather than reducing capex and putting it more towards expenditure. So I think as long as the headline fiscal deficit is concerned, definitely there'll be a reduction, and they'll show a reduction for the next few years also.
We need one last question and then we'll wrap up this discussion. We just can't end the discussion without talking about taxpayers. Okay, so first I want to know your expectation as a taxpayer, and second, long pending demands, be it having more tax benefit as far as your home loan is concerned, getting more instruments in ATC. Now we have a new tax structure as well, where earlier we saw a new tax structure coming in, then we saw more tax slabs coming in, obviously to have more people opt for it, but the reports are still suggesting that people are more tuned towards the older tax structure, clearly because of the tax benefits and investment options that they are getting out there. Do you think the government would really do something, tinker something over here, and as we say in Hindi, oot ke muh mein zeera, will it be that way? But it's important for to do something for the taxpayers though.
If you ask me for my wish list, yes, definitely I would hope for a reduction in taxation levels. It's especially at the highest slab level, because it is reasonably high. Uh, we also need to just take a step back and see that for the first time in FY24, income tax collections are the greatest contributor of taxes, even more than corporate taxes and even more than GST. So I think income tax has done its role, and a bit of relief would not hurt, and it would also aid consumption. So I think that angle can be explored, but that's the wish list. I don't think it's a probability, because it's an interim budget and there is no real compulsion to do that. Again, people keep asking for either STT versus capital gains. That debate will keep going on, but I don't think interim budget would be the place for the government to think about that.
And with that, it's a wrap. CIO of Trust Mutual Fund, Mihir Vora, thank you so much for being on the show and helping our viewers decode at least what should be expected from the budget today. Thank you so much.
Thank you. Always a pleasure.
All right, with that, let's step into a quick break. And further on, we'll be taking our viewer queries, and we will have Anil Rego with us joined, who will be doing live financial planning for our viewers after this break. Welcome back. You're watching The Money Show, and it's time to get our viewer queries answered. And today I have with me Anil Rego, founder CEO Right Horizons. Anil, hi, good evening. Welcome to the show. And I will take my first viewer's question for you, which is from Aditya. And he wants to invest in debt funds for 20 years. He already has been investing in equity funds, and he's doing an SIP of 25,000. So in terms of debt asset allocation or debt allocation in terms of diversification, what should be his strategy?
Yes, so first of all, 20 years, and he's looking at a long period of time and looking to invest in debt funds. So that actually, I believe that he can invest into equity. Now, it's good to keep a certain, say, debt allocation. So from that point of view, if your debt allocation is very low, and you want to build that up maybe for a period of time, you can invest into some of that debt funds, and possibly you can either use ultra short term or even short term funds. And there could be funds like, say, Aditya Birla Savings Fund, HDFC Ultra Short Term, and say ICICI Pru. You can even look at a medium term or an ultra short term fund. So that is something that one can do. But since you're looking at 20 years, I believe that part of it maybe you can actually invest into a hybrid, which is say a dynamic asset allocation fund, which manages risk well also. So it's possible that for a little bit of your longer term needs, it will give you a higher return while managing risk and having a sort of lower return compared to equity.
All right, so that's the suggestion coming in for Aditya, and it's important to look at your portfolio's diversification. It's a longer term. I mean, 20 years is a good amount of time for you to stay invested in equity, but then, yeah, having a balanced approach really helps. So, Aditya Birla Savings Fund, HDFC Ultra Short Term, ICICI Pru Ultra Short Term or Medium Term Fund is the recommendation coming from Anil. With that, Anil, that's all the time we have on the show today. Thank you so much for being on the show and helping our viewers today. And we move on, just one day to go for the budget. And Nilesh Shah from Kotak AMC talks about what to expect from the upcoming interim budget, which areas is he focusing on, and how might the market react on this vote on account, and what kind of steps should an investor be taking in. So let's listen to this conversation. And with that, it's also a wrap on the TMS.